You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back once again holding court on yet another Education Wednesday, which means it's time for the global premier options education program. Yes, it is time once again for Options Bootcamp. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the ever-engaging network upon which all of you are mainlining these days. If you're just listening to Bootcamp, man, you're missing out. Nearly a dozen other shows coming at you. If you like what you hear, this show, anything else we do, could be on the app, could be on iTunes, could be on YouTube, wherever you get your fine content these days. Some stars, a rating, a review, all that stuff helps new people continue to discover the content. And of course, if you want to discover even more additional content, let's say you got questions. We get it. Everyone's got questions these days. You got more questions. Pro Q&A sessions are for you. We unleash our pro members upon some of the best brains, movers and shakers in the world of options, and let you guys have at them with your questions. It's fascinating. It's fun what you folks come up with all the time. I just had another great one just yesterday. So all sorts of fun going off. And of course, Options Oddities on Friday. 200, I think I saw the other day, 250 odd episodes waiting for you on that exclusive pro podcast feed the second you hit that button. So you got some listening to do with the optionsinsider.com/pro, the place to go. Just gave away our pro trading crate. Congratulations to our winner who won that on the Monday Option Block show. Get your name in the hat for the October crate. The months are flying fast and furious, listeners. Get your name in there. theoptionsinsider.com/pro. Speaking of names, we had our old buddy, the Oracle of New Hampshire, Mr. Matt from Oratz, moonlighting on the show last week, but I am pleased to welcome back my buddy, the co-host of this program, the black-hatted one himself, Mr. Dan Passarelli from Market Taker Mentoring. Mr. P, welcome back to the show, sir.
Hey, Mark, it's great to be back finally. I feel like I've been away for, a month.
Something like that. Yeah, you've been traveling hither and yon. And, the reason I said this is the global leader of options educational programs is because you took a little sojourn across the pond last week, Mr. Dan, which is why you couldn't be on the show, but also a sojourn that is very germane to this program, sir, because while you were there putting down the old beverages in Oktoberfest in Munich there, you ran into it and were indeed guided around the festival by a listener of the program. Were you not, sir?
I was, yeah. Super great guy, Ali John. He joined us for lunch, and, we got a time to chat, time to share a couple liters of beer, Spaten, as I recall, which is not Ali John's favorite, by the way, but he's okay with it, I guess.
He's a listener of this program, so he's clearly a man of discerning tastes. So
That's right.
That just shows listeners the reach of Options Bootcamp doesn't end here at the shores of the old USA. We have listeners right in from all over the globe, including Ali John. I believe he wrote in earlier this year with a question about German tax law and how it was going to impact his options trading. At the end of it, he threatened to show Dan around Oktoberfest. I'm glad to see he lived up to his threat out there. But in all seriousness, I say it all the time. This is another literal example that you folks are the best audience in the biz. We love you all. If you want to volunteer to shepherd us around any other global bear festivals, by all means, let us know as we keep on rolling right on into a little bit of the old mail call.
Mail call. Time to look at questions submitted by our listeners.
All right, everybody, welcome to the mail call. And I should mention here at the top of the show, Dan, our listeners may have noticed you don't sound like you're in your studio down there in the heart of Frankfurt. So where are you gallivanting this week, sir?
Well, I told you the road sign that I came across. The last road sign said
the
NS Egypt, which is, I guess, a small town in Wyoming.
The NSFW road sign that you just passed out there. So yes, Dan is joining us via the magic of telephone this week, listeners. So if he sounds a little more distant than usual, that's why, listeners. Let's get out to some of it now. Let's pay off what some of you folks have been up to over the last couple of weeks here on the show. Let's start off. We asked you last week, we've seen a lot of red on the screen. There was some red this week as well, post-Fed. Starting to turn around. It seems like a little bit today, but we shall see. The day is young. And so we asked you last week, it's a good time to gauge your sentiment on these markets. Quite simply, where are you comfortable buying into or indeed buying more SPX if you already have some in your back pocket right now? Gave you 4 ranges where it was when we posted this poll last week. So between 4,300 and 43.5, vacillating around there, or a little bit lower. So you're going to start nibbling below 4,200, or you want to wait till it gets even lower below 4,000, or you're a lookout below crew. You're like Matt, our cohort from last week. He's in the 3,000 before 5,000 level in the SPX camp. You folks in the bottom half choose, or I should say the last selection could choose the below the 2022 low, which is below 3,600. And Mr. Dan, our audience usually tends to be nigh on apocalyptic in these polls. They really go for the most dire option almost every time. This time, not quite as dire. 42.1% choosing. They want to buy in when it's a little bit lower, below 4,200, which is kind of close to where we were coming into today. And then right behind it, though, almost a quarter choosing the below the lows from last year. So they're waiting till it gets back below 3,600. Then almost 20% choosing even lower. So they're happy buying in below 4,000. And only about 14% choosing right here or right where the market was last week, 4,300 to 43.5, in which case you got to love the SPX now that it's at about a 42.35. Mr. Dan, do those results surprise you at all? Is that kind of what you expected?
That is pretty much what I would expect. And pretty much where I would go to. I mean, the thing is you really just can't time the market perfectly. And especially if the context of this question is for the long-term investor. If you miss it by a handle or two, you're never going to sell the put strike right at the bottom and get assigned at the perfect time. It's just not going to work. So, me personally, if I were trading right now, I'm on a bit of a extended road trip here across the country. So I learned not to trade on road trips. I can tell you that story later. But if I were sitting in front of my computer, I'd be letting some short puts go. Why not? It's not a bad time to load up for the long term, especially at some nice high premium levels.
Indeed. Let's get out to our question of the week from this week, listeners. And we're having a little timely fun with you folks, saying there's a lot of hot IPOs and also new listings hitting the market. So which one of these are you most excited to add to your options portfolio? This is, of course, as a result of all of you asking us when we'll be able to trade options on XYZ, pick your poison IPO out there. So we gave you 4 choices: ARM Holdings, Instacart, Reddit, or the new combined WWE UFC entity known as TKO, which I do like that ticker, I have to admit. Mr. Dan, do you have a vote? And then more importantly, which of these do you think our audience is choosing for their options trading, sir?
Yeah, because I've been traveling so much the last couple of weeks, I have not been really digging in on some of these IPOs coming out. But I do I do find, well, ARM is definitely a potentially interesting one with chips doing what they're doing lately. But also, I find Reddit to be sort of an interesting one. I mean, it's a very established social network, and I mean, it's just got such a humongous user base, notwithstanding some of the, what do they call it, backlash or whatever that came from the charging for, certain services and that kind of thing. But, people have short-term memories. So I think that could be a very, very interesting one because, with any product really, you build the audience and that's where you make your money. Then it's roll out the products, and they've got the audience there.
There you go. Dan voting for Reddit. Let's see if the audience agrees with him right now, Dan. And 62.5% are going the hardware way. They're going the chip way. They're going ARM. So a lot of folks in on ARM. It doesn't really surprise me. I kind of thought ARM would kind of run away with it. Number 2, almost 19% going for TKO. So getting themselves a little bit of UFC and or WWE mixed together. Interesting. I think that is like the ticker, Dan. And then it is a good ticker. And then Instacart, 12.5%. And then Reddit bringing up the rear, Dan, only 6.3%. We've had some write-ins, including someone writing in for Birkenstock. I didn't even realize Birkenstock was going public. So there you go. If you want some old school sandals going public, then maybe you want to write in for them. They are expected, I think, somewhere valued around $9 billion, which seems pretty lofty for a sandal maker, but c'est la vie. That's the world we live in, listeners. Right now, that's live at Options, the place to go to make your voice heard. Dan, you've said you've been on the road the last couple of weeks, so you'd be forgiven if you did not have one, but have there been any interesting questions or feedback or anything percolating top of mind that you want to address for your question of the week, sir?
Well, shortly before I left, we rolled out our new MTM Smart Income system, which is our covered call, cash secured put, sort of a more modern take on the wheel strategy. And I get questions very frequently when people say, what is one of the first option strategies that I should consider trading? And for some people, it is that. For some people, it is the covered call. But for some people, it's not that. For some people, it's just simply buying calls, because if you're an investor, you would be in that covered call camp. If you're a trader and you're looking for short-term profits, I mean, things like buying calls, I mean, that's what that's made for. It limits your risk and it gives you greater leverage. So two very, very different strategies. And so it sort of depends on the market segment as to which one you would be more likely to start with.
Should have joined us on the show last week, sir. It was all about the wheel. We had a hot time with the old wheel out there, so we might have to get the Machiavelli take on the wheel on a future episode, sir.
Yeah.
It is a surprisingly applicable strategy to a wide variety of people out there, including the audience of this program, the beginner entry-level options trader, which is why we discussed it here. I thought it would be intriguing for a lot of you out there. All right, let's get to you folks. Speaking of you folks out there, what you guys and gals have on the brain. Let's go to Kevin Tuwohi. Hope I'm pronouncing that correctly. He says, hi. Well, hello, Kevin. I was just wondering if there is an options podcast episode that explains the relationship between a spread and saying which strike leg premium is, quote, over. I love that. Does that determine which leg you are buying versus selling? Any additional clarification would be appreciated. Thanks, Kevin. That's a great question, Kevin. You know, sometimes Dan and I and everybody else here on the network, we kind of just to get into our jargon and we throw these terms around that we've been bandying about for decades in some cases. And we don't stop to think that maybe some of the newcomers to the world of options may not be as familiar with this terminology. So it's great. I haven't heard someone ask me in a long time which leg is over on a spread. That kind of brings back memories. Not all of them good, Kevin. But the short answer to your question is, does that determine which leg you are buying or selling? The answer is yes. And which leg of a spread is over is going to be the more expensive one. So, you know, you used to have a walk-in broker come into your crowd. If it's a straight up vertical, pretty much the closer to the at the money, the meatier leg is going to be the part you key around. That's what you're buying or selling in let's say a call vertical. You're buying that lower strike and selling the out of the money strike. Things get a little wonky when you start getting out into time spreads. Your straight calendars, you're going to have the longer term leg obviously being over. It's going to be more time premium, everything along those lines. When you start getting into diagonals or even ratios, you're buying one, selling three, and maybe there's a diagonal component too. Then it starts getting a little funky, and sometimes you would have to look and sit and say, wait a minute, which leg is over in this? And we'd have to discuss it with the broker who was putting up the trade and say, I think this is over, so that's how we're going to quote it. Layman's terms, it's going to be the more expensive of the two legs, and that's going, or however many legs you have, whatever component you're doing, more expensive one versus the other. And that's usually how you're going to key around the trade. You're going to be buying or selling that leg, and that means you're going to be buying or selling the trade as well. So, yeah, it's a great question. It's a terminology we don't bandy about too often here on the network anymore. It is kind of an old school floor. I'm not curious, Kevin, where you even came across this. Who threw the term over at you? Because it's kind of funny and kind of old school. But Mr. Dan, anything you want to add for Kevin here, who's confused when he hears about different legs of the spread? How does he determine which one is over?
Yeah, like Mark touched on, with straight spreads, like a simple time spread or a simple vertical spread, or even condors, iron condors, butterflies, iron butterflies, those are all very, very straightforward and simple. It's just whichever one, like Mark described that pretty well. But like Mark said, when it comes to certain time spreads where there's maybe two different strikes and maybe there's multiple options, maybe, more than two, and there's different expirations, it can get super tricky, man. And also with things like synthetic stock, it can be tricky too. So the best thing to do is what I used to do when I was on the trading floor is, even if I thought I understood exactly what the broker is trying to communicate, I would say, okay, hold on. Let's make sure you want to buy this one and sell that one, right? And once he agreed, then okay, here's where I would do that. I would have to collect this for that, or I would pay you this for that. And another important thing to keep in mind, which is maybe a little tangent from this question, but I think it plays in, is that once you get into some of those spreads where it's tricky like that, like how much am I, paying over or collecting over or under, whatever, is the premium that you're paying or collecting starts to go a little bit out the window. It doesn't necessarily matter if you're paying or collecting. It's what's happening with the margin and what that position looks like, and does it sort of match what you're trying to achieve. So, I think that kind of plays in there too.
Yeah, great question. Very esoteric term. Again, 9 times out of 10, it's not going to be hard to figure out. But in those weird scenarios, ratio, time, iron condor swap with 6 different legs, something like that. Sometimes you have to look at it and be like, wait a minute, which one is over? And sometimes it may even surprise you at the end, because the broker may even, or you might even think, I thought this was over. I thought I was pricing it here, but actually it's something else. So usually for most of the trades you folks encounter, it's not going to be that difficult to determine, but sometimes it may be. So that's a great question, Kevin. I would love to know more, the origins, the genesis of that question. I'm intrigued. All right, let's keep rolling. Speaking of intrigue, this is an intriguing handle. This is Green Ranger Forever. So maybe Smokey the Bear fan, maybe I think Power Rangers had a Green Ranger. Could be any of those. He or she wants to know, have you heard of the PPUT index? What are your thoughts? Is it tradable? What is the methodology? And is it even worthwhile for us to follow? Man, that's a lot of questions packed in there, Green Ranger Forever. Well, when you first sent this in, I kind of assumed you meant the put index, PUT, which is one I know a lot of people talk about. We've talked about on the network many times. It's the much more widely followed of these. And that is, of course, where they're selling an out-of-the-money put in the SPX and tracking that performance as a result. But what you actually were asking about is one that is far less known. This is the PPUT. So tack a P on the front of there, listeners. And what this is actually kind of the opposite of that. This is a 5% out of the money put protection index. What this tracks is owning SPX at the beginning of the month and also going out and buying a 5% out of the money 1 month put on the SPX, which is also known as kind of the most expensive way to hedge yourself. If you're going to keep doing this month after month, that gets costly. And so that's what this index simulates out there. And you can go out there and track the results of this. If you want to see an example of why we always kind of caution you against just doing that without selling something else, because you can see very quickly how expensive it was. You know, some crazy moments, some of those annualized costs on those puts can get ridiculous to the point where it dwarfs anything you're going to make in any reasonable expectation in the index itself. So just bear that in mind. So that's what the P-put is. Again, you're just buying a 1 month, 5% out of the money put, rolling it every month, and then rinse and repeat till time immemorial. I think they go back all the way with the data to 1986. So if you want to go check it out on the SIBO website, they have the data on this from 1986 all the way till now. Like a lot of these things, I'll have to go check and see. I don't think it's updated intraday. Most of these, like SKU and others, are kind of close-to-close type indexes. Also, the other question, is it tradable? No, most of these SIBO indexes that they kind of throw up there against the wall to see what sticks. And they have a lot of cool stuff. If you haven't been over there, check it out, listeners. They have a lot of indexes you probably haven't heard of, maybe like the P-put, that track a lot of interesting things. Usually they're geared around SIBO proprietary products like SPX or VIX. That's what they're trying to do at the end of the day, drive more interest in those. But theoretically, they're interesting. They just come up with some new ones, dispersion. I have to go kick the tires on that one and see what they're cooking up over there. That one, I think they actually do plan to list a future. So that one could potentially be tradable. They've come out in the past with single name VIXs like Apple's and others that never became tradable. So don't get too excited when you hear these things, because most of them kind of just wither and die on the vine. But they're intriguing theoretically, and that's I would put this in that category. Intriguing to watch. If you want to go check it out and see how much it actually costs to do this hedging over time, then this is a good tool for that. But not tradable, not anything you could utilize in your own portfolio. Mr. Dan, any thoughts here for Green Ranger Forever about the P-put? He wants to know, is it tradable, and is it worthwhile for him to keep an eye on?
It's definitely worthwhile to keep an eye on, because you will learn how viable of a strategy that is, and when it is a viable strategy. You know, if you're able to go back and look over the last 20 years, first of all, you would probably notice that there's a bleed. It should lose money every year, except some of the big down years, and it would be very interesting to go and take a look at that and see which years it made money, because that'll help you decide when to use that hedge. And that's the other reason why the SIBO creates some of these indexes. Yes, some of them, like Mark said, they create them because maybe down the road they might want to list a product on them. But, they also go and they have conversations with big institutional traders or big advisory groups that might not use options right now, and they want to have a benchmark to be able to, say, hey, look, if somebody has done this for the last 20 years, here is what would have happened. And so then they can better explain how options work in very specific scenarios, to help kind of spread the word and make it more accessible, I guess, intellectually to institutional traders who aren't using them and aren't doing some of these things, or advisors who aren't yet using them.
Dan, you know how I learned to slow my roll and my anticipation on all these crazy SIBO products they keep putting out there? It was back at an FIA Boca, probably around maybe even 10 years ago now, I don't know. And SIBO invited me to a ridiculously early morning breakfast to talk about this stuff. It was way too early to be talking about volatility products. And they came out and said, Dan, you probably recall these products. They said, we're going to be listing a VIX on Apple, as well as other products, GLD and others. And I thought, oh my God, they've done it. They've cracked it. VIX and Apple, two great tastes that taste great together. Everyone and their mother's going to want to trade this thing. This is going to be the home run of home runs. And I left that briefing in the morning very tired because it was early. And then kind of enthused. I was like, okay, here we go. VIX and Apple, how can this lose? And yeah, it never even made it to BAT in terms of a tradable product. It's still out there, it's still disseminated if you go dig around the bowels of the SIBO website. So sometimes in these things, listeners, things that you are certain are going to be a home run never even make it really off the drawing board. So I'll get excited when I see actual tradable things. They're talking about trading this dispersion. That seems very esoteric. So if they can't get Apple VIX up there and tradable, maybe they should try that again. Maybe people would be into that now. But yeah, I always slow my roll on these things, Green Ranger forever. But they are cool theoretically and definitely worth paying attention to because it saves you the hassle and money of doing that hedging yourself and then seeing in the real world how much it's going to cost you. Just watch that put index and see how much it gets killed. And then you realize, oh, maybe I could do this a better way in terms of hedging. And then check out our archives and we'll help you do that. All right, let's go here to Downtime 79. Got a lot of great handles this week. Downtime 79 wants to know, this whole zero DTE thing isn't a new concept. Didn't you guys have to deal with expiration day trading when you were market makers? Yes, every month, like clockwork. Mr. Dan, this is the point we've kind of been making for a while. Expiration day trading isn't new. Having it every day is new. Dealing with it once a month was not new. What are your thoughts and your memories from the whole expiration day experience when you were on the floor? And was it something you actively sought to trade a lot in, or did you kind of like to close things down and stay away from it mostly?
Yeah, I would. I mean, in a perfect world, I would love to try and get flat the at-the-money strike or any strike that could be likely to be in the money or at the money, I guess I should say, for sure by lunch on expiration day and try and stay out of it. And, that was almost never possible, but hopefully there was a market maker standing next to you that you happen to be long 30 of them and they were short 25 and, you can trade them at a agreed upon price. I had a stint trading corn options, and I'll tell you what, there in the grains, there's a lot of people who expiration week, they start backing off and don't even trade them and just, I'm not trading the September corn anymore. I'm done with that. I'll make a market on the D's. So, but yeah, now though, as a retail trader, which is the category I happen to fall into now as a retail trader, I do seek out opportunities. It's a very, very specific niche, and it's really easy to get run over if you're not familiar with it, don't have a really tight strategy. But, it's like anything else. If there's something that exists, you can try and figure out how to exploit it and make money from it. And back in the day, I felt I had better opportunities than to mess around with expiring options, but now they've become interesting, and so I put in the time to figure them out.
Yeah, I was definitely in that category. We would try to close stuff out the week of expiration. We'd be those guys who would annoy the brokers, like, hey, I got 3 lot open on this strike, and I'd just buy 3, and the broker would be like, God damn, they would hate us. So yeah, we would do a lot of that stuff, try to close out any strike that would be even remotely relevant. Even in the SPX when I was out there, we would do that too, just to avoid any surprises. You don't want those on expiration day. That said, you wanted to go in flat on expiration. Sometimes trades would come in and you could maybe, if you were quick on the trigger finger, like Dan mentioned, buy some options, below parity, be able to sell them above. Those kind of things were nice. That's kind of literally free money if you can make it happen. You have to be quick on the trigger finger, which again, not for the faint of heart out there. This new breed of zero DTE, all cash settled, it's a little bit of a different beast out there, but it does replicate some of that feeling, some of that kind of pulse quickening, sweating, popping tums feeling that people used to have on expiration day. Yeah, it still is mystifying and kind of shocking to me that people are now gravitating towards expiration rather than moving away from it like most of the pros used to back then. Again, you look at SPX, 35 of the top 40 most active contracts on any given day, I don't care what day you pull it up, are going to be expiring that same day. Again, that shows you that product has fundamentally changed. And that's a lot of big institutions. That's not just your mom and pop retail doing 5 lots accounting for that. No, that's big funds doing that. So people have clearly grokked to a new way of trading SPX just in the last year. And I don't think we've still seen the full ramifications of all that. But it is a fascinating change. Again, at the end of the day, not entirely new. You are correct. But the frequency certainly is new. Even when we moved to weeklies, we only had expiration once a week. Now it's bam, bam, bam every day. it's a very different beast, and we haven't seen the market tumults maybe yet in this new era of everyday expiration. And a lot of people are still waiting. We had a guest on our Pro Q&A last week, and he said, we still haven't seen the hole in the Death Star. He's a big Star Wars fan. Haven't seen the hole in the Death Star with these 0 DTE options yet. And perhaps maybe we are just waiting for that. Dan, I know you're on the road. I know you got to get back to it. So we'll get out of here this week with a little bit of listener love. A little bit of listener love from, this one comes, another great handle. We got great handles this week. Machiavelli, one of my favorite political theorists out there, listeners. If you haven't read a good old Machiavelli, it's not just the end justifies the means, even though it does come around to that. But it's interesting stuff. The historical context in which it was written, all sorts of interesting things about it. But Machiavelli, Dan, listens to the show. And he wrote in to say, don't tell them, and he posted a GIF of, they don't know I'm listening to, and he posted below it the Options Bootcamp cover art. So there you go, Dan. Machiavelli is out there listening to us. Just don't tell anybody. It's a secret, sir.
Awesome.
I think he's doing a little meme love with us. So, yeah, it's been a great listener episode. They're taking you. I didn't get chauffeured around Oktoberfest, Dan. That was you. But Machiavelli's loving us. Thanks to all of you who write in, listen, keep driving up our bandwidth bills. We love you all out there. And before we go, Mr. Dan, if folks want to reach out to you after you're done with your road trip, where should they go? What should they do?
Oh, I'm always available, even on road trips. Just head on over to our website, markettaker.com, and we'd love you to join our community for free. Just click the top right button that says Join Free, and we will welcome you with open arms.
This magic technology known as telephone, I think they're onto something. I think that Alexander Graham Bell kid, he was onto something, I think. It works. Go figure. So there you go, listeners.
I just hope the cord is long enough.
Yeah, you had to stretch it a long way from Frankfurt. I am shocked that you managed to stay on the full show, but I'm glad you made it. You know where to go, listeners. Market Taker. Don't forget the second T for Theta out there. That is going to do it for us on the network today. Short and sweet today on the network. Back again tomorrow, of course, with your usual doubleheader. First off, we'll be back with the Flow Master, a little bit of the old option block. After that, of course, for This Week in Futures Options with our friends over there at CME, breaking down all the latest in all things futures, options, metals, equities, ags. You never know. It's going to make it crypto on that show. You got to tune in every week. Friday, of course, volatility views. And then after that, exclusively for you pro folks, back with options oddities. We got up to some interesting business last couple of weeks. We'll see how it's paying off. And then, of course, back again on Monday with the old option block and the crypto rundown. And then Tuesday, of course, the pro Q&A. And then we're back next Wednesday. Another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.